Welcome back to your ultimate pit stop, Piston Pundit. Oil may not fire pistons directly, but it powers the industrial engine behind vehicles, factories, and entire economies. Few nations have shaped that system like Venezuela, home to some of the world's largest proven crude reserves. For decades, U.S. Gulf Coast refineries were perfectly matched with Venezuela's heavy, sulfur-rich oil. Then came early 2026. U.S. intervention, a shift in export control, and rerouted trade lanes upended long-standing assumptions. Now U.S. refiners, Asian markets, Indian buyers, and Chinese players are scrambling to adapt as crude flows, sanctions, and strategic rivalries collide. Why Venezuelan heavy crude became refinery gold. Venezuelan oil isn't just oil, it's a very specific mechanical challenge. Its heavy, high-sulfur composition makes it thick, dense, and difficult to process, especially compared with the lighter shale grades flooding North America. But for advanced U.S. Gulf Coast refineries, that challenge was the advantage. These plants invested billions in delayed cokers, desulfurization units, and hardened steel systems designed to crack stubborn molecules into gasoline, diesel, jet fuel, and petrochemical feedstocks. Think of it like a high-compression engine tuned for a specific fuel blend. The economic logic was straightforward. Buy discounted heavy crude, apply sophisticated refining hardware, and extract premium products. Venezuela supplied the feedstock. U.S. refineries supplied the engineering. Politics, not chemistry, eventually broke that loop. But refinery chemistry alone didn't collapse this system. Geopolitics did. 2026 power shift. Control of Venezuela's oil changes hands. At the start of 2026, Venezuela's oil equation changed abruptly. U.S. intervention accelerated a power transition, removing Nicolas Maduro and placing effective control of oil exports under Washington's influence. This wasn't symbolic diplomacy, it was direct leverage over the country's primary revenue stream. Almost immediately, U.S. regulators shifted from tightly controlled case-by-case licenses toward broader export authorizations. The goal was clear: reintroduce Venezuelan crude to global markets, but under new rules. Reports of multi-billion-dollar supply deals and ambitious long-term infrastructure investments followed. The signal to the market was unmistakable. Venezuelan oil was no longer frozen out. It was being selectively reintegrated, reshaping who could buy it, how it was priced, and which refineries would benefit first. And once access reopened, the biggest winners were the refineries built for this fuel. Gulf Coast refineries reclaim heavy crude advantage. For U.S. Gulf Coast refiners, this shift felt like a long-delayed green light. Operators such as Valero and Phillips 66 moved quickly to secure Venezuelan barrels through newly authorized channels, often at meaningful discounts to global benchmarks. These plants were already optimized for heavy, sour crude, so reintroducing Venezuelan oil was like reinstalling a familiar component in a proven system. Analysts estimate tens of millions of barrels could re-enter global circulation, with hundreds of thousands of barrels per day flowing into U.S. facilities. That matters for margins. Heavy crude discounts improve refinery economics, reduce reliance on imported high-sulfur fuel oil, and strengthen competitive positioning. Still, sanctions frameworks and licensing rules mean this ramp-up isn't instantaneous. It's a controlled restart, not a full-throttle sprint. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer toward the global reaction. Because while U.S. refiners surged ahead, Asia didn't follow the same path. Asia pulls back as Venezuelan oil flows west. Before 2026, much of Venezuela's crude headed east, particularly to China, where state-owned refiners had learned to integrate heavy barrels into their systems. But under the new export regime, that flow has slowed. Chinese majors reportedly stepped back from U.S.-controlled Venezuelan cargoes, citing pricing structures and contractual complexity. This wasn't a rejection of heavy crude itself, but a reassessment of risk and value. India, meanwhile, has shown interest as refiners expand their heavy oil processing capabilities, though U.S. prioritization and pricing spreads have limited volumes. Across Asia, Buyers are hedging by turning to alternative heavy grades from the Middle East and elsewhere. The result isn't a clean eastward shift, but a fragmented rebalancing shaped by politics as much as refinery hardware. And when trade patterns shift, enforcement inevitably follows. Shadow tankers targeted. Sanctions battle moves offshore. Venezuelan oil flows under the new regime have been uneven. Late 2025 and early 2026 brought intensified enforcement against shadow fleets, tankers that hide positions, disable tracking, or reflag to evade sanctions. U.S. authorities escalated by filing civil forfeiture warrants to seize dozens of vessels tied to Venezuelan crude, freezing ships, and cargo to block unauthorized exports. The impact was immediate. Many sanctioned tankers turned back or were barred from ports, cutting flows through illicit channels and complicating long-haul shipments to Asia. Even so, a handful of non-sanctioned supertankers continued sailing, proving oil still moves under pressure. The episode underscores how sanctions policy, maritime law, and crude economics collide, not just in boardrooms, but sanctions and seizures only address the surface problem. The deeper issue lies inside Venezuela itself. Opening the throttle, Venezuela bets on oil reform. While export headlines dominate, the bigger story is Venezuela's internal push for reform and production recovery. In January 2026, the National Assembly advanced sweeping oil sector reforms aimed at attracting foreign capital and modernizing a long-declining industry. Proposals include cutting extraction taxes and royalties, allowing private operators to run fields independently, and offering international arbitration, measures designed to unwind decades of state control and instability that scared investors away. U.S. officials and analysts say output could rise sharply if stability improves and investment returns. Estimates point to roughly a 30% increase from current levels, potentially adding hundreds of thousands of barrels per day, though timelines hinge on infrastructure, politics, and security. If implemented, reforms mark a turning point, restoring production at scale. And if that production does come back, the impact won't stay contained. Venezuela's return sends shockwaves through global oil. The return of Venezuelan crude isn't just a U.S.-Venezuela story, it's reshaping global oil markets. Forecasts point to demand growth in 2026, yet supply still outpaces consumption, keeping prices pressured despite shocks. Reintegrating Venezuelan barrels into trade helps rebalance heavy crude, influencing benchmarks like Brent and WTI. With OPEC plus limiting output growth, every barrel, including Venezuela's, matters to traders and refiners. Beyond pricing, insurers, shipping lanes, and risk models are being recalibrated as sanctions enforcement raises uncertainty. Strategically, Venezuela has shifted from a China-leaning supplier to a contested asset drawing in the US, Europe, and India. Less about volumes alone, more about who controls access to one of the world's largest heavy oil pools. Verdict: Venezuela's oil future, revival, reroute, or relapse. The 2026 reshaping of Venezuela's oil sector stands out as one of the decade's most consequential energy shifts. After years of sanctions, underinvestment, and declining output, Venezuelan heavy crude is re-entering global markets under a new mix of U.S. brokered exports, evolving licenses, and selective capital inflows. U.S. Gulf Coast refiners gain an immediate edge, securing discounted barrels tailored to their complex refineries, while China and India recalibrate supply strategies amid new pricing and political realities. Inside Venezuela, reform efforts and the prospect of higher production, if stability holds, offer a path to reviving one of the world's largest crude endowments. This isn't a clean reset, it's a global energy reroute with lasting effects on refinery margins, alliances, and oil market dynamics. Now, what do you think? Does U.S. control stabilize or politicize Venezuelan oil flows? Will Gulf Coast refiners keep the edge long-term? And could reforms truly revive production? Or are the risks still too high? Share your thoughts and experiences in the comments. Before you go, subscribe to Piston Pundit so you don't miss our next vehicle updates and deep dives. Thanks for watching, and see you next time. You can now check out any of the videos on the screen. There's plenty more to explore.